Hello, I'm Hagen Rogers with Watermark Advisors, and we're going to continue in the series about M&A and the economy. And today we're going to look specifically at sellers and what does it mean for sellers to be considering wanting to sell their business but facing uncertainty with the economy. We're going to look at that from several different ways. Let's go back and first revisit what we shared in our last video about concerning signs and charts from economic releases. First, inflation. We're seeing inflation growing drastically from 1.31% in 2020, now at 8.54%. This is the CPI index. And then secondly, we're looking at natural gas, which is one of several measures of the energy sector, but growing from $1.84 to $8.87. Now, natural gas is so important because natural gas is what really fuels much of our manufacturing sector in our country. This is a big problem, and we need to take this, the magnitude of this problem as we think about selling. So a key question is timing. Now, first, to consider timing, the first obvious and most important fact is age of the owner who's thinking about selling. And empirical data indicates that the older the owner, the more likely they are to go ahead and attempt to sell. So with that fact out of the way, we now want to look at four different areas of managing your business, and these are very important to discern is now the right time to sell or not. So first, let's look at financial results. And this is about resilience. How resilient was your company in the last recession or the last couple of recessions? Did it hold up well in terms of revenues, EBITDA margins? If so, that's great. That's a good sign. But then you want to ask yourself, what does that mean with regards to what's changed in your industry? What's changed with your own company that might mean different outcomes, different results in a potential recession or stagflation ahead? So with this, you want to keep in mind that buyers are very concerned and they focus on the income statement primarily, and they look at last 3 years of revenues, next 5 years of revenues, and the same for EBITDA margins, last 3 years, next 5 years. Many business owners don't run their business off of projections. We get that. But for this decision, we think it's important for you to go through the exercise of building out a set of base case projections, not a top-down approach, but a bottoms-up approach where the assumptions are built off reality of your business. Very important. Top-down would be revenues are growing 5% a year. That's not going to hold up under scrutiny of buyers. Bottoms-up instead. And have a downside case. And then step back and say, what does this mean in regards to me going out and having really excited buyers and your story to tell being exciting. So take that into consideration. Next, we want to talk about strategy. And here we want to, the theme here is consistently revisiting strategy. Many businesses revisit strategy once a year, some every other year or every few years. But in a time of uncertainty like we're heading into, it's prudent to get on top of this and revisit strategy and the assumptions. Here I'm going to tell you a quick story of a company called TLC Vision Care Centers, and they were a premium LASIK provider and had great success in the late 90s. They grew their business from $58 million in 1998 to over $200 million by 2000. All the while the industry was exploding, a 61% growth in the industry from 1996 to 2000. And TLC took the strategy of being premium price. Well, that was great, except for two things happened. Right around 2000, 2001, discounters came into the market and started to eat away at TLC's market share. And then consumer confidence really fell. And you see here in this chart, in this red circle, that U.S. consumer confidence fell in the 2000-2001 time frame. And as a result, the annual procedures per center at TLC fell 75% between 2000 and 2003. So you would think that management would have huddled up and revised strategy, but they didn't do it in a timely way. And as a result, the company went bankrupt in 2009. So moral of the story here is that strategy needs to be constantly revisited, especially when you're thinking about selling, all the more you would think maybe not as important, but even more important to be thinking about that in light of timing. Next, we want to look at momentum. Here, we want to look at momentum in two ways: EBITDA margins and amount of EBITDA, and industry attractiveness. There are more and more buyers that are interested in your business when you're $1 million in EBITDA. That should open up a good bit of the market, but even more so when you're $2 million in EBITDA. The market, just especially for financial buyers, really opens up. So are you at that level? Are you going to be able to sustain that level going over the next few years? If so, that's a good sign. EBITDA margins. Businesses become more attracted by buyers when they are at double-digit EBITDA margins. Are you at a 10% EBITDA margin, or can you see a pathway to that? If so, or more, double-digit EBITDA margin is very important. And then finally, with industry attractiveness, the way you gauge this is how many unsolicited approaches have you had over the last 2 years? Have you had buyers come to you, call you, or meet you, strategic or financial, and say, hey, we're interested in buying companies in this space. Would you ever be interested in talking to us? If you've had that, then likely even in a recessionary period, you will continue to get that kind of interest. So that's a good sign that the momentum is there for you in the marketplace. Next, we want to look at processes and procedures. Here we're going to tell you another story, and the moral of the story is being able to adapt your overhead structure given a really relentless focus on operational excellence. Now, to tell this story, we're going to look at two companies that were in the home healthcare space. We had Lynn and American HomePatient. One was a leader, one was an outlier. And here you see Lynn in this green circle. They were at $443 million in 1997, and American HomePatient very close in revenues, $387 million. But look at the difference in 12 years. Lynn quadrupled its revenues, where American HomePatient retracted and declined in revenues to $243. Not to go through all the details, it's a fascinating story of what happened, but the fact was they had totally different approaches to operational excellence. Relentless tracking by Lynn and how each location was doing allowed their management team to quickly react when Medicare reimbursements were put in place by the federal government. And as a result, they outperformed, and American HomePatient really became the outlier here. So, lesson to apply is external shocks like a recession are navigated better when management has a relentless focus on operational excellence. These are all factors that you can manage. They're under your control, manageable, just by having a great team and practices. But let's talk for a minute about the M&A process, which is outside of the realm of your normal operations. And this is a visual of what a buyer goes through when they buy a company. They go through 3 phases and all these blocks represent steps of buying a company. Preparation, transaction, integration. What's in yellow here is due diligence. And notice how many blocks make up due diligence. It is a significant and onerous process that a buyer undertakes. And you, the seller, have about 2 months to respond to 300-400 questions. So preparing well for due diligence, if you can, will help you avoid red flags showing up in the process, which means you may lose leverage and the deal terms may go out of favor from you to the buyer. So all of these points, we kind of wrapping it up here, are important to take into consideration. So selling your business in a recession should be considered as a viable option. However, thinking through readiness under such conditions as we may be going into requires careful consideration. Thank you very much.